Hi, I'm Manish Gunwani. I'm the CIO Equities at Nippon India Asset Management. Today we are here to talk about a new NFO, a new fund we are launching, which is the Nippon India Flexi Cap Fund. Before we go on to the fund, let me talk a bit about equities in general. I know a lot of people today feel that the stock market has gone up a lot, that the valuations are expensive, and that is definitely true. In a historic sense, if we see on a price to earning multiple or price to book basis, which are the traditional ways we look at valuation, the markets are definitely expensive. But we have to be careful about judging the markets only by that lens. I think there are a lot of positives in the market today. First of all, we all know that India and the globe has gone through a tough time in this virus crisis. Thankfully, vaccinations are broadly working globally, and we are seeing recovery in most of the countries. And India also looks set to have a strong recovery going forward. Second, the global economy, which drives a lot of corporate earnings, almost 30 to 40% of India's corporate earnings are actually from exports and other global sectors. The global economy is very strong. The household balance sheet in India continues to be robust. The savings that have been built up over a long period of time ensures that the Indian households have a lot of ammunition even after this crisis to spend. And we think that as the virus fades out, we will have a very strong demand in consumer discretionary, etc. And also the capex cycle looks set to pick up. Given these positives, while valuations are expensive, we think corporate earnings growth will be very strong over next 2 3 years, and therefore equities can deliver a steady compounding of returns, which is going to be probably much more superior than many other asset classes. So the NFO we are launching, which is in the flexi cap category. Now the flexi cap category is one of the most exciting categories in the mutual fund space. The reason being that if you see the way markets have worked, typically among the three segments, which is large cap, mid cap, and small cap, there are various years or phases where one of these category does very well and one or two of the other categories don't do all that well. So for example, in 2018 and 2019, the large caps did very well, but the mid and small caps went through both price and time correction. So the advantage of a flexi cap fund is that it has the liberty to straddle all these three categories, increase or decrease the exposure in each of these three categories, so that in a dynamic way, it can create alpha by riding the waves and troughs uh, of the performance of these three categories. So it gives a lot of flexibility. The investment universe is very vast, and at Nippon, especially, that is a big advantage because we have a very vast coverage. We have almost 530 stocks under coverage, which is probably one of the biggest in the industry. So the fact that you have an investment universe which is very vast, the fact that you can change your exposure to large cap, mid cap, small cap, and be very dynamic among these three categories makes the flexi cap category very attractive. If we see the flexi cap fund, the way we have envisioned it is, first of all, we have a range of what will be the large cap proportion of this fund, which is 50% of the large cap weight in the benchmark. So for example, if 60% is the weight of large cap in the benchmark, 50% of that is 30. So we will be either 60 minus 30 or 60 plus 30, which is 30 to 90. So that determines the range of large cap we will be. Within that range, the exact amount we are at any point of time is done more through a bottom up approach where whenever we see value in large cap, we will increase exposure. Whenever we see value from a bottom up perspective, from a research perspective, we will increase mid and small cap exposure. Within large cap, we will have two broad categories. The first category of 5 6 stocks will be the mega caps in the benchmark, which are the heavyweights, the top 5 10 stocks in the benchmark. And we will have some representation of that, which will be the first category. The second category is large caps, where we will deviate from the benchmark and try to create alpha. On the mid and small cap side, in general, we will be looking at growth stories, mid caps, which over years will compound earnings fast and become large caps. Let me just mention 2 or 3 themes we are looking at. We believe that there is a lot of consolidation going on in industries led by technology, led by compliance or regulation like GST, RERA, etc. So in many industries, the top 2, 3 players, they're getting market share. And they will obviously benefit even if the industry is not growing fast, but their earnings are growing fast. And though that is one theme we are positive on. The second theme is basically the new age business models, which are into sunrise sectors. So whether it's e-commerce, internet, chemicals, pharma, biotech, etc. Lot of mid and small cap, especially in that space, there is a lot of these new business model companies which are coming into the market. And that is another segment we think we can create good returns. The third theme is this whole economic recovery, especially in the outdoor consumption space, because last 15 months, obviously, sectors like travel, sector like beverages have got impacted because people did not move out. We think given the robust household balance sheet, given that virus is likely to fade away, that is another segment we are positive on. So this is ideal for investors who have a medium to long-term horizon, because the fund is likely to have a fair representation of mid and small caps. So versus asset allocation fund like Balanced Advantage Fund or Multi-Asset Fund, it is definitely going to be a bit more aggressive, a bit more volatile, but over time, the return prospects are higher. So this is ideal for investors with 3 to 5 year time frame. The taxation is going to be equity taxation, and we think that people who are allocating to equity should make this a core part of their portfolio. So the NFO opens on 26th July, closes on 9th August. In conclusion, we think that equities over next many years is going to be a great asset class. The Nippon India Flexi Cap Fund has a very promising structure, which will enable using our robust research to generate healthy returns.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.